Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the third video of investment account chapter of CA Inter Group 1. Now in this video we are going to solve the second problem of our series, but actually this problem is from the study material, okay? Test your knowledge question number 2. Right, but before going ahead, let me tell you that in the previous videos what we have done. In the previous videos, as you can see, in the first video we have discussed the concept of investment accounts, and we started this chapter by understanding the fixed income bearing securities in detail, right? We started understanding each and every concept of that, the concept of accrued and due, the concept of X interest and cum interest, and taking an example to understand the whole process, and then the format of investment account also. That's very important. We've understood this in very much detail. See the notes over here, yeah? So this is very important. And then the calculation of interest, this working note you have to prepare for the calculation of interest. It's very simple. If you make use of this working note, then you will not make any mistake. Yeah, you will see that while solving this problem. And then we also saw the journal entries for your logical understanding of the investment account, how it is prepared. Yeah, yes. And then what we did in the second video of investment account, we solved one problem, illustration 1 of the study material, this Y Limited, Bull and Bear Company and Y Limited. Yeah, so yes, we solved that problem. See the working note that we prepared in that, and then the investment account. Yes, we did all that. Now let's get back to this question. Yeah, if you haven't watched those two videos, then please go and watch those videos first. Otherwise, let's go ahead. Yeah, let's understand this question and solve this. Now see here, let's read the question. The following information is presented by Mr. Z, a stockbroker, relating to his holding in 9% central government bonds. So here we are dealing with what? Fixed income bearing securities, because here they have given us bonds, right? So bonds of fixed income bearing securities. Then the main thing about this question is, see here, opening balance is given, opening balance of investments, right? So in the previous question, in the illustration 1, we saw there was no opening balance. So here we have got the opening balance. So what does it mean, opening balance? See here, we have got nominal value of that opening balance 1,20,000, and the cost of that opening balance 1,18,000, and then in the bracket they have said nominal value of each bond of each unit is ₹100. Yes, but what does it mean, opening balance? Simple enough. See, you must have purchased the investment in the previous year, so the balance of that, the closing balance, is being forward here as opening balance. Simple as that. पुराने साल में कोई भी पिछले साल में तुमने क्या किया था, इन्वेस्टमेंट परचेज किए थे, so उसका बैलेंस कैरी फॉरवर्ड हो रहा है. Simple as that, right? So what are you going to do with that opening balance? In the investment account, since the investment is an asset, it has debit opening balance, right? Asset को कौन सा बैलेंस होता है? डेबिट बैलेंस. So you will take it on the debit side to opening balance, or to balance B by D, you will take the cost of the investment, the X interest price, and the X interest price is what? The cost of the investment, 1,18,000. Yeah, and then in the nominal value column, you will take the nominal value 1,20,000, the face value, right? So that's what you have to do with the opening balance. And then there is one more thing. Whenever opening balance is given, you have to make sure whether the due date is equal to year end or not. When the opening balance is given, you have to make sure whether the due date is equal to year end or not. If it is equal, then what you're going to do, as usual, you are just going to take the opening balance to balance B by D on the debit side of investment account. Simple. But if it is not equal, if the due date is not equal to year end, what you're going to do, the interest receivable concept comes into existence. Yeah, because we do accounting on the basis of accrual concept, right? So what will happen whenever the due date is not equal to year end? For example, this is an entirely different example I'm taking over here to make you understand what is this, what we have to do. So see here, what happens, let's say the due date is on 31st December and 30th June of a year. Okay, the interest is paid half yearly. That's what is due date, right? On the due date you get the interest, isn't it? On the due date you get the interest. Yeah, so you will receive the interest on this date and on this date only, right? So now what will happen when the year end will come? When the year end will come, some interest will be there that will be generated till that period. It will be accrued, it will be built up. That's what is meant by accrued, right? Interest is accrued. Utna interest build hua hoga, right? But it is not received to you. It is just accrued, it is not received. क्योंकि कब मिलेगा आपको interest? You will get the interest only on the due date. You will not receive the interest till the year end, isn't it? You are going to receive the interest in the next period. So what you have to do, as per the accrual concept, you have to record an asset. You have to show in your financial statement that interest has been accrued of this period and it is receivable to us in the next period. So you have to recognize an asset. Interest receivable account debit to interest on investment account, right? At the end of the year, you have to pass this adjusting entry. Yeah, हमको interest मिलना है 3 महीने का, isn't it? January, February, March. Till March, 3 month interest has been accrued. ये interest is receivable to us. but we are going to actually receive it in the next due date on 30th June, isn't it? So at the last day you are going to pass this entry, क्योंकि क्लोजिंग बैलेंस है ना, इन्वेस्टमेंट का क्लोजिंग बैलेंस है ऑन दिस डेट, सो इंटरेस्ट एक्रू हुआ होगा, and then the very next day you will have an opening balance, the very next day you will have an opening balance, and then at there what you're going to do, you are going to cancel this entry which you pass, right? Interest receivable account to interest on investment. What is this? You are recognizing an asset. Yeah, वो चार होते हैं ना, क्या होता है? प्रीपेड एक्सपेंसेस, आउटस्टैंडिंग एक्सपेंसेस, इनकम रिसीव्ड इन एडवांस एंड देन इनकम एक्रूड बट नॉट रिसीव्ड. तो वही है ये, राइट? सो हियर व्हाट डू वी डू? द वेरी नेक्स्ट डे वी कैंसल ऑफ दैट, yeah, and then we will actually receive it on 30th June, so it will be adjusted like that. Okay, so what will happen on the closing? You are going to record that you are supposed to receive the interest, you are going to recognize the asset, and in the next period you have to cancel that entry off. You do this always with the outstanding, prepaid expenses, income received in advance, and here this is what income accrued but not received, right? So as per the accrual concept, क्या है, हमको record करना ही है, इतना interest accrue हो गया है, yeah, but we have not received it, we will receive it in the next period, so we have to record that, we have to show the correct position to the users of the financial statement, right? So that's why, so ये record करना पड़ता है. तो जब आपको opening balance होगा, when you will have the opening balance, what you have to do, see the format. When you will have the opening balance, on the nominal value of that you will have to calculate that interest receivable and cancel it off. Okay, ये closing day पे करते हैं, interest receivable record करते हैं, इधर cancel करते हैं, right? Here we record and here we cancel. So we are talking about this thing. On the first day of the year, what you're going to do, you are going to cancel that interest receivable to interest receivable. Okay, because what will happen on this date, you will actually receive it. On the due date, what will happen, you will actually receive the interest and it will be adjusted like that. Yeah, तो क्या करना है, कैंसिल करना है. देखो ऐसे लेना है, टू इंटरेस्ट रिसीवेबल. अगर ओपनिंग बैलेंस है ऑन द डेबिट साइड, अगर क्लोजिंग बैलेंस है एंड द ड्यू डेट इज नॉट इक्वल टू ईयर एंड, ऑन द क्रेडिट साइड बाय इंटरेस्ट रिसीवेबल. Okay, so this is what you have to do. The calculation is very simple. We'll see the calculation. Yeah, last due date till the year end. Okay, last due date till the year end. Last due date till the year end. ये period है जिसका इंटरेस्ट आपको कैलकुलेट करना है. Okay, yes. So now this is the concept here. Okay, whenever the due date is not equal to year end and not or and there is an opening balance, then you have to do this. Okay, you have to take interest receivable and buy interest receivable if there is a closing balance and the due date is not equal to year end, and the shortcut is last due date to year end. Okay, right? So now let's see the whole question. I just wanted to clarify, when the opening balance is given, what you have to make sure of, whether the due date is equal to year end or not. And if you see at last para here, interest dates are 30th September and 31st March. Let me show you the diagram. See here, in this question the due dates are when 30th September and 31st March. Okay, 30th September and 31st March 2011. Yeah, leave the year, you have to see the months, 30th September and 31st March, and then the year end is when, see here, show the investment, sorry, Mr. Z closes his books every 31st December. You see this, what you say, this year end is on different date, year end is on 31st December and the due dates are on 30th September and 31st March. So here the interest receivable concept will come into existence. Yeah, इतने पीरियड का इंटरेस्ट एक्रू हुआ होगा जो तुमने रिकॉर्ड किया होगा इन पिछले साल, इन द प्रीवियस ईयर यू मस्ट हैव रिकॉर्डेड दैट एक्रूड इंटरेस्ट एज इंटरेस्ट रिसीवेबल. सो हियर इन द ओपनिंग ईयर, या दिस ईयर, व्हाट यू गोइंग टू डू, यू आर गोइंग टू कैंसल ऑफ दैट इंटरेस्ट बाय टेकिंग इट ऑन द डेबिट साइड ऑफ द इन्वेस्टमेंट अकाउंट टू इंटरेस्ट रिसीवेबल, नॉट इन्वेस्टमेंट अकाउंट, इंटरेस्ट अकाउंट आई मीन, या इंटरेस्ट अकाउंट में लेते हैं. ओके, टू इंटरेस्ट रिसीवेबल. ओके, एंड द कैलकुलेशन इज सिंपल, लास्ट ड्यू डेट till the date of, till the year end, right? Yes, then see the question here, what have they said? On 1st March 2011, purchase 200 units ex interest at rupees 98. So this is the first transaction we have. On 1st March 2011, we have purchased 200 units of bonds. Yeah, and ex interest price is given. एक तो price दिया होगा, either the ex interest or cum interest. दोनों में से एक दिया होता है. You can easily calculate the other one. Okay, and then on 1st July 17/2011, sold 500 units ex interest out of original holding at rupees 100. So here what is happening, we have sold 500 units and the ex interest price is given, so easily we can calculate cum interest. Yeah, and then 1st October 2011, we have purchased 150 units at rupees 98 cum interest. So here cum interest price is given. Yeah, so one of the prices will be given. Okay, so far we saw that the year end is on 31st December and the due date is on 30th September and 31st March, and then on 1st March we have purchased 200 units, and on 1st July we have sold 500 units of bonds right? 1st July, and then on 1st October, just now we saw we have purchased 150 units, right, at come interest price. So that's here, yeah, the very next day of the due date, isn't it? 30th September 2011 is the due date, and this transaction is happening just a day after the due date, isn't it? 1st October 2011. Yeah, so there will not be any interest on this, yeah, any accrued interest. So we'll see that later, don't worry. So purchase 150 units, and then on 1st November 2011, what is happening? We have sold 300 units ex interest at rupees 99 out of original holdings. So here the ex interest price is given, and this is happening on 1st November 2011. We have sold 300 units. Yes, and then the year end will come, and then here also, if we have closing balance, what we have to do? We have to also record that interest receivable. Yeah, interest receivable concept is very important. You have to understand that properly. It's very simple. At the closing, you have to record that. At the opening, you have to cancel that. Yeah. So in the ledger account, what will happen? In the ledger account, simple. In to interest receivable, by interest receivable. Samjha na? Simple hai. And the calculation for that, last due date to the date of year end. Okay. That's how you will take the period for the interest calculation. So now let's solve this problem. Let's see how to, solve this. Yeah. Let's solve this. Now here we have the solution. Let's understand how to do this, how to solve this problem. So I hope you already know the format. Yes, here what are we doing? We are preparing two accounts, interest account and investment account. Interest is which type of account? Income account. Interest on investment, right? You get the interest. So that's an income account. So it has credit balance. And investment is what? Asset account. It has debit balance, right? Yes. So here we are preparing two accounts, and then this nominal value is just for the convenience, okay? Because we always calculate interest on the face value, the nominal value. So that's why we have this nominal value column just for the convenience purpose, and the valuation also at the last to calculate the closing stock, right? So the first thing that happened in this question was what? Here the opening balance was given, right? The opening balance nominal value 1,20,000. So take the nominal value, to balance B by D 1,20,000, and the cost, as I said, in the investment column, yeah, in the amount column, that's the investment account, only the ex interest will go, only the ex interest price will go. So that's why, what is ex interest? Ex interest is the cost of the investment. So 1,18,000. So 1,18,000 will go into the investment column, right? And then I have already told you the interest receivable concept. So we have to do what? We have to cancel the interest receivable. Whatever interest, जो भी interest पहले record हुआ था on the closing date, that we have to cancel now. So how are we going to calculate that? See, it's very simple to calculate that. See, what are we going to do? Interest record हुआ था पिछले साल on the closing balance, yeah, on the face value of the closing balance. So this is the closing balance, isn't it? Purana closing balance is now the opening balance. So इसी पे calculate करना है. So 120 is the face value, yeah, 1,20,000 into the rate of interest is what? 9%. So 0.09 into, for how many months? Do you remember the shortcut? I've already told you the shortcut. What's the shortcut? So shortcut is last due date till the year end. Last due date till the year end. Yeah, last due date till the year end. Let me show you the diagram, this question diagram. See here, last due date was 30th September, isn't it? And then the year end was 31st December, isn't it? See the question. Where is the question? See the question. 30th September is the due date, last due date, and the closing date is 31st December, isn't it? So last due date till the year end, that's the period you have to take. So I have taken 1,20,000 into 9%. I've got this, and then last due date till the year end will be how many months? Leave September month, October, November, December, 3 months, isn't it? So into 3 by 12, into 3 divided by 12, that would give you 2,700 as your interest, accrued interest. कौन सा interest? Accrued interest, ये period का interest. Last due date till the date of year end. Yes, you get that. Yeah. So we have cancelled off the interest receivable, and the shortcut is last due date to year end. That's what I have written in the red ink over there. Yeah. And then what happened? And then we purchased 200 units of bond. At what price? And which kind of price is given? See here. On 1st March 2011, what we have done? We have purchased 200 units at X interest at rupees 98. So X interest price is given, right? So what we have to do, whenever we purchase or sale, we have to immediately go for this working note. Yeah, see here, on 1st March 2011, we have purchased 200 units. Yeah, and we already know the face value is 100, isn't it? So see here, we already know the face value is 100. So the face value, the total nominal value would be what? 200 units of bond we have purchased. The face value is 100. So that's equal to what? 20,000. The nominal value is 20,000, and then we have to calculate the interest. Yeah, whenever you purchase the securities between the due dates, whenever you purchase the securities from any other investor, what will happen to that investor? You have to pay him the previous interest. Yeah, जो भी interest accrue हुआ है till the date of transaction, जो भी interest accrue हुआ है, yeah, this period interest, whatever interest that has been accrued, you have to pay that interest to the third party, the investor from whom you have purchased the investment, yeah, the bonds. So you have to pay that accrued interest. So you have to calculate that. Yeah, so how are you going to calculate that interest? What is the period? The period is simple, the shortcut, last due date till the date of transaction. Last due date till the date of transaction, isn't it? That's the shortcut we have, right? See, to bank account purchase, last due date to date of transaction, isn't it? DD to DOT. So see, the last due date was when? 1st October 2011, isn't it? 1st October 2011 was the last due date. I mean, the due date was 30th September, but we take the very next day. Yeah, sorry, it's not 11, it's 2010. Yeah, 1st October 2010 was the last due date till the date of transaction, 1st March. So take the date of the transaction, 1st March 2011. So the number of months between that period is how much? See, October, November, December, and then January, February. Yeah, we will not take March. Why? Because it's 1st March, right? So number of months is 5. So easily calculate the interest. You have to calculate the interest on the face value, 20,000. 20,000 is the face value, and the percentage of interest is 0.09. Yeah, I mean 9%. And then 5 months, right? We have to calculate interest of 5 months into 5 divided by 12. That's equal to 750. So 750 is the accrued interest of this period which you have to give to the seller, right? So it's 750. And then X interest you already have in the question, isn't it? In the question they have said, see here, purchase 200 units, X interest at 98. So 200 into 98 is what? The total X interest price. 200 units you purchased at 98 X interest, 19,600 is what? 19,600 is your X interest price. So you can easily calculate cum interest. How are you going to do that? Simple, just add these two together, you will get cum interest. 19,600 plus 750 interest you just calculated, then you get cum interest 20,350. Simple. Yeah, so you are done with the purchase, the first transaction. Yeah, you calculated the interest, you added it with the X interest, you got the cum interest. Now here in this question there is no brokerage and net of brokerage also. Yeah, so these two columns will be empty, right? So the entry would be what? Whenever you purchase in investment account, what do you do? See here, on 1st March you will take two bank account because you pay the money, right? And you will take the nominal value 20,000, and then in the interest column, the interest which you paid, you have to take that. So this will go over there, okay? 750. So 750 will come over here. Yeah, and then in investment column only the X interest price. If there would have been any brokerage, then we would have taken the adjusted price from net of brokerage, but here there is no brokerage, no taxes, nothing. So directly we can take this price 19,600 over here. Simple. So this is the entry, right? Whenever you purchase, do you remember the format? Whenever you purchase, what happens? See here, whenever you purchase, it comes on the debit side as to bank, and whenever you sell, it comes on the credit side as buy bank. Yeah, and the shortcut for the interest calculation is what? Last due date, the previous last due date to the date of transaction. That period you have to take and calculate the interest. Yeah, you know that. We have seen that in the previous video. Then what happened? Then see here, the due date came, isn't it? इसके बाद क्या हुआ? इसके बाद ड्यू डेट आ गई, राइट? ड्यू डेट आ गई. On 31st March we are going to receive the interest. 31st March 2011, because as said in the question, the due dates are when? Where did the question go? See here the question. Interest dates are 30th September and 31st March. So on 31st March is the due date. You will get the interest. Yeah, for the entire 6 months. For the entire 6 months. Due date to due date. Due date to due date. Yeah. जिसके पास भी bonds होगा on the due date, that person will get the interest. Okay, so we are going to receive the interest. Now see, how are we going to pass the entry for that? See, it's very simple. The posting on 31st March 2011, we are going to receive the interest, and we are going to receive the interest on what? On the face value. But हमारे पास अब कितने bonds हैं? कितने face value के bonds हैं? 20,000? No, we have 20,000 plus 120, right? We have 140,000. Yeah. See here, we have 1,40,000 bonds, face value bonds, right? So on this you have to calculate the interest. Okay, that's why we have nominal value column over here for the convenience purpose, because we always calculate the interest on the face value. Okay, so entry IC आएगी posting 31st/3/2011 by bank account. We are receiving the money, right? And it will come in the interest column only. Yeah, income account is getting credited. Why? Because we are receiving the income. Income is increasing, so interest account will get credited. All right. Yes, by bank account 6,300. But how did I get this amount? So see, on 1,40,000 we have to calculate the interest, isn't it? Are you clear with that? Because we have the bonds of 140, right? 120 we had from the previous year, and then we had purchased 20,000. So we'll calculate the interest on 140. Okay, and then we are going to calculate 0.09, 9%, right? 9%. And then the period, what? Due date to due date. Always remember, whenever you will receive the interest, yeah, on the due date, the calculation is what? The shortcut, due date to due date, DD to DD. Okay, so due date to due date is how many months? Due date to due date is 6 months, isn't it? Every 6 months you will receive the interest, right? So due date to due date is 6 months, right? So into 6 divided by 12, so that's equal to 6,300. Did you understand? We calculated the interest on 1,40,000, 9%, and due date to due date is 6 months, so 6 by 12, 6,300. That's all. Yes. Then what happened? Then, as the question says, see here, what happened? On 1/7, July 2011, we have sold 500 units of bonds ex interest out of original holding at rupees 100. So we have sold 500 units at what? At price 100, right? So this is what? This is ex interest price. So whenever we purchase and sell, what do? Whenever we purchase and sell, we go to this working note, right? So on 1st July 2011, we have sold how many? 500 units, as said in the question, right? 500 units are sold on 1st July. So the face value of that is how much? 500 units into 100 is the face value of each bond. So 500 into 100, that's equal to 50,000. So the face value of that is 50,000, and then we have to calculate the interest, the accrued interest. Whenever we sell the securities, what we are going to do? We are going to take the interest from the purchaser, the accrued interest, whatever interest that has been generated till the date of transaction. Yes, जो भी इंटरेस्ट बिल्डअप हुआ है फ्रॉम द ड्यू डेट टिल द डेट ऑफ ट्रांजैक्शन, उतना इंटरेस्ट हम लेंगे, राइट? सो वी हैव टू कैलकुलेट दैट accrued interest. Okay, so how are you going to calculate? Simple, the same shortcut, last due date till the date of transaction, last due date till the date of transaction. The last due date was when? 31st March, isn't it? So can I not take the very next day? Yeah, I can, right? So that's what we are going to do. Okay, 1st April 2011 till the date of transaction. Date of transaction is 1st July 2011. Yeah, so how many months? From April, see here, April, May, June, July, not July, this is 1st July, right? So we'll not take July, only 3 months, April, May, June, right? So only 3 months. So we'll calculate the interest on the face value, 50,000 into 0.09, the rate of interest, into 3 divided by 12, only 3 months, right? So 1125. So 1125 is the accrued interest till the date of transaction. Yeah, so this is the interest. So now how are we going to calculate the cum interest price? Just add it with the X interest, and X interest is directly given. Yeah, see here in the question what they have said, we have sold 500 units, add rupees 100, add rupees 100. So this is the X interest price, as said here, X interest, right? So X interest is how much? 500 units we have sold at the X interest price is 100. Yeah, so 50,000. Okay, so 50,000 is X interest price. Now what most of the students make mistake is, see here, they think that we have taken this 50,000 from here. No, we have not done that. Here in this transaction they have done that to confuse you. See, in this transaction they have given the X interest price as equal to face value. Yeah, so we calculate X interest every time. Okay, 500 units have been sold. What is the X interest price? X interest price can be anything, 98, 97, 95, anything. Yeah, here it is 100 in this transaction. So that's why we have got 50,000 over here. Don't think that we have just copied 50,000 from here. No. Okay, right. So to calculate the cum interest, just add it. 50,000 plus 1,125. You got 51,125 as cum interest price. Clear? Yes. So we have to record that posting, right? We haven't done that. So see here, on 1st July 2011, we have sold 500 units, right? So buy bank account. Whenever you sell, buy bank account. Yeah. Whenever you purchase, to bank account, right? So we are selling over here. So buy bank account, last due date to date of transaction, the shortcut, yeah, last due date till the date of transaction, and then the nominal value is 50,000, but the interest is 1,125. Yes, so that's what you have to take in the interest column. But then in this investment column, what are you going to take? In the investment column, you always take X interest price. Okay, always take X interest price 50,000. Yeah, now don't think we have just copied this 50,000 from here to here. No, this is X interest, this is face value. Okay, it can be different also. Only in this transaction it is same because the X interest price 100 is equal to the face value 100. That's why 50,000 and 50,000 are same over here. Okay, yes. Then what is happening? Then as you can see, let's go to the question. Then again on 1st October 2011 we have purchased 150 units at 98 cum interest. Yeah, now here the cum interest amount is given. Yeah, cum interest amount is given 150 units. So first go to the working note. Yeah, calculate the face value. We have sold off 150 units. Yes, so 150 into 100, that's equal to the 15,000 face value. Yeah, and this transaction has happened on 1st October 2011. 1st October 2011. See here. Okay, wait, before going to this transaction we have to do the due date here. Yeah, due date is coming over here, 30th September. So we have to do the due date first. So see here, 30th September 2011, what has happened? The due date has come, so we are going to receive the interest on the due date, right? So we have to make the posting of that first. So see here, by bank account we are receiving the money, we have to take that in the interest column. Income is increasing, right? So how did we calculate that? It's very simple. Always calculate the interest on the face value. So we had 140 before, 120 plus 20 face value, but then we have sold 50,000 face value of bonds, right? So take all that into consideration. 120 plus 20 minus 50, you have sold off 50. So the remaining face value that you have now is 90. So on these 90,000 face value of bonds, you are going to receive the interest. Yeah, because you are holder of these bonds only. So इसी पे तुमको interest मिलेगा on the due date. राइट, ये ड्यू डेट आ गई ना 30th सितंबर 2011, तो इस डेट पे तुमको सिर्फ 90,000 बॉन्ड्स पे ये मिलेगा, राइट? 90,000 वर्थ ऑफ बॉन्ड्स पे इंटरेस्ट मिलेगा. सो 90,000 इस पे तुमको इंटरेस्ट मिलेगा. यू विल गेट द इंटरेस्ट ऑन दिस. सो 90,000 इंटू 9% इंटू 0.09 इंटू द due date to due date. Yeah, you will receive the interest on the due date. So the calculation for that would be what? Due date to due date, isn't it? लास्ट इंटरेस्ट कब मिला था? इधर. तो अब यहाँ पे मिल रहा है 6 महीने के बाद, isn't it? So due date to due date, this is the period you have to take into consideration, right? So into 6 divided by 12, 4050. So this is what? 4050. Clear? Easy? Yeah. Now let's get back to that. Purchase on 1st October. See here, and then what happened? The very next day we purchased 150 units. You already saw that, right, in the question. So we purchased 150 units of bond on 1st October 2011, the very next day. So there would not be any interest in this. कोई भी accrued interest देने की ज़रूरत नहीं है. क्योंकि because due date से एक दिन के बाद ही हमने purchase किया है. So no time has been passed. If no time has been passed, then there is no interest. Yeah. So see, on 1st October 2011, we have purchased 150 units of bond of the face value 100. So the face value is 15,000. And then what is the shortcut for the interest calculation? Last due date till the date of transaction. So 1st October till 1st October only. है क्या नहीं? हम last due date जब लेते हैं, what do? We take the very next day, isn't it? We don't take 30th September. We take 1st October, the start of the period. So it's happening on the start of the period itself. So you can't have any interest. So interest will be zero. Okay? Interest will be nil. No months has been passed, so no interest. Yeah. So if there is no interest, then what would happen? The cum interest will be equal to X interest, isn't it? Common sense है ना. Interest ही नहीं है तो X interest is equal to cum interest, because what is the formula of cum interest? Cum interest includes X interest and interest. If there is no interest, then cum interest is equal to X interest, right? So the cum interest price is given in that question. I mean the transaction. See here, purchase 150 units at 98 cum interest, right? So 150 units you have purchased at 98 cum interest, then the price is how much? The cum interest price 14,700. But then there is no interest in this, minus 0, then 14,700 would be what? X interest also, right? So this is what will go in the investment column. Yeah, you have purchase. If purchase happens, then it will come on the debit side to bank account on 1st October 2011, last due date to date of transaction, but there was no interest, so interest would be 0. Yeah, face value 15,000, 150 into 100, and then here you are going to take only the X interest price. That's what you always do. You only take the X interest price into the investment column. Yes. Then what happened? Then as you can see in the question, on 1st November 2011, we have sold 300 units, X interest at rupees 99 out of original holdings. So here the X interest price is given of 99. Yeah. So see, 300 units have been sold, yeah, into 99 x interest. It is said in the question x interest, so the x interest price is directly given 29,700. so here x interest directly will come 29,700 and the face value is 30,000, isn't it? Kaise? 300 units you have sold, yeah, and the face value is 100, so the face value is 30,000. Now you have to calculate the interest. How are you going to calculate the interest? Simple. Last due date till the date of transaction. Last due date till the date of transaction. So this transaction happened on 1st November. The last due date was on 30th September. So from September till November, how many months have been passed? Leave the September, it's 30th September. So October, only 1 month has been passed. Yeah, only October. Yes, then 1st November comes, right? So only 1 month has been passed. So the period of interest is only 1 month. 1st October 2011, last due date till the date of transaction 1st November 2011. So 1 month has been passed. So you have to calculate the interest. 30,000 on the face value, right? 30,000 into 1 month, right? 1 by 12 into 0.09, the rate of interest. That's equal to 225. So 225 would be your accrued interest. Is that clear? Yes. So to calculate the cum interest, what you're going to do? 225 plus 29,700. The x interest. Just add these two together, you will get the cum interest 29,925. Yeah. So yes, it will come on the credit side, right? We have sold, right? So here 1st November 2011 by bank account you have sold it. The face value is 30,000. Yes, 30,000, and then the interest, accrued interest you have to take. Yeah, you will receive the interest when you sell the securities, and then you will take here in investment column only the x interest price 29,700. Simple. Right, so everything is over. All the 4 transactions we have taken in here in the ledger account of investment account, right? So everything is over. Now what you have to do? Now you have to close the books. I mean, to close the account, right? So to close the account, first what you need? First you have to see whether there is any closing stock. If there is any closing stock, you have to value the closing stock. All right. After doing the valuation of closing stock, then only you will be able to close the account. Yeah. You have to first see whether you have closing stock or not. So see here, first you had 1,20,000 face value, 1,20,000, yeah, 1,20,000 face value of bonds. Then you purchased 20,000, yeah, and then you sold 50,000. See here, minus 50,000, 50,000 worth of bonds. Then again you sold here 30,000 worth of bonds, minus 30,000, and then you purchase also here 15,000, isn't it? Again, so plus 15,000, that's equal to 75,000. So now you have 75,000 with you at the end of the year. So that's your closing stock, the quantity of the closing stock. So 75,000 you have, okay, the face value, I mean, not the quantity, the only the face value, right? So this is the face value you have, 75,000. Now on this face value you have to calculate what? Interest receivable. मैंने बोला था ना आपको, जब भी आपके पास क्या होगा, ओपनिंग बैलेंस होगा and the due date is not equal to year end, you have to what? Cancel off the interest receivable. And if you have closing balance and the due date is not equal to year end, as it is not in this question, see here the due date is on 30th September and the year end is 31st December, तो इतने का इंटरेस्ट क्या हो जाएगा? एक्रू हो जाएगा, है क्या नहीं? तो इस पीरियड का इंटरेस्ट आपको क्या करना पड़ेगा? You will have to calculate that and record it in your investment account. Yeah, you are supposed to receive the interest, but actually you will receive it in the next year on 31st March of the next year, right? So how will you calculate that? Simple, 75,000. On this you will calculate on the closing stock, the face value of the closing stock, 75,000 into 9%, as you already know the interest rate. Yeah, but then what period you will take? The period, the shortcut you have to use. What was the shortcut? The shortcut was, let me show you that. The shortcut was what? Last due date till the year end. Yeah, last due date till the year end. That's what you do. Last due date till the date of year end. So here, see here, last due date to year end. That's the shortcut, right? So if you see over here, September, right? After September, what comes? October, November, December, right? Last due date till the year end. Only 3 months are there. So 3 by 12, right? 3 by 12. So into 3 divided by 12, that's equal to 1687.5. You can also take full figure also. You can round it off if you want, but I'm not doing that, okay? So 1687.5, right? Simple. So So this is what you have to do, and then we have to value the closing stock. Now this is the crucial part of this video, because in this video I wanted to explain you the FIFO method, okay, first in first out method, and also WAC. If we have time, let's understand WAC also. Yeah, so let's go and understand how to value this closing stock. Yeah, now let's understand how to do the valuation of closing stock as per FIFO method, first in first out method, as asked in the question specifically, right? So see, what you have to do is you have to take the opening balance and the purchases you have made in these boxes, separate boxes, okay, opening balance, purchases, 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 and then in these boxes what you have to do is you have to take the quantity of the bonds, quantity of the investment, and the x interest price of those investment only. Either जो भी quantity है उसी की x interest price, right? So see, for the purchases it is directly given, purchase 200 units, purchase 150 units, yeah, and in the first transaction x interest price is given directly 98, isn't it? So you can directly take x interest price. Here for 150 what has happened, the cum interest price is given 98, but then this is happening on which date? This is happening on the due date itself, the very next day, so there is no interest in that, accrued interest, so cum interest will be equal to x interest, so the price will also be equal 98. Yeah, even if it is not equal, it's easy to calculate, isn't it? Take the example of this first transaction, yeah, the purchase. What are you going to do? 19,600 is the total x interest price, and you know you have purchased 200 quantity, isn't it? ये तो face value है, लेकिन purchase किया था 200 quantity, right? 19,600 divided by 200, you will get the x interest price 98. Yeah, that's what we have got over here, 98. Yeah, you understand that. So इसका calculation बहुत easy है, right? But here, how did I get this 1,298.33 x interest and the quantity of the bonds? See, it's very simple. What you have to do, opening balance face value is given as 1,20,000, and the face value of each bond is 100. Just divide those two, 1,20,000 divide by 100, you get the quantity of the opening balance, 1,200 bonds, right? And then you need x interest price. So how did I get this 98.33 as x interest price of these 1,200 quantity? Simple, cost is directly given, na? The total cost, the total x interest price is 1,18,000. So to find the x interest price of each bond, you just have to divide it by the total bonds, 1,200. Yeah, so 1,18,000 divided by 1,200, that's equal to 98.3333. Yeah, so that's how I got this 98.333. Simple, easy, right? So ऐसे लेना है, sequence में लेना है, okay, date sequence में लेना है, and then what you have to do, whatever that has come first, that will go out first, okay? Not just the quantity I'm talking about, the issue, the pricing will be like that. See here, what you have to do, see, on 1st July 2011, what has happened? You have sold 500 units, isn't it? Where is the question? See the question, sold 500 units when? On 1/7/2011. So you have to take like this in arrow. In these two periods it has happened, right? See here, कब हुआ है? पहले opening balance हुआ, then purchase, then you have sold, right? Opening balance, purchase, then you have sold. So here you have sold. Now here you have drawn the arrow, right? So now you have to make use of FIFO, first in first out. So what was first here? The opening balance. So is 1,200 say, yeah, from this 1,200 you are going to take out 500. This 500 will come out of this 1,200, okay? So reduce that. So what is the balance? If 500 goes from 1,200, yeah, 1,200 minus 500, the remaining is 700, yeah. And then what? And then what happened? And then one more thing you sold. See here, one more sale happened here on 1st November, yeah, after this purchase. So draw the arrow. You have sold 300 units, yes, 300 units. So ये कहाँ से आएगा? फर्स्ट इन फर्स्ट आउट, जो भी पहले आया था, जब तक ये ख़त्म नहीं होता तब तक यहीं पे रहना है, फिर इधर जाना है, ओके? फर्स्ट गो फॉर द first lot. If the first lot is emptied, then go to the second lot, okay? Like that you have to do. So now we have 700, right? We have sent out 500. Then what you're going to do, 300 will come out of this only, this 700 only, yeah? So 700 minus 300, that's equal to 400. So the balance in the first lot now we have is 400. 500 gone, 300 gone from this lot, okay? समझ में आया? Yes, simple, right? So now simple, that's all. Now what you have to do, just multiply and find it out, yeah? So 400 balance is there, 400 into 98.333, yeah, this price, and then 200 into 98, 150 into 98. This pura closing stock hai. This is all closing stock, right? The quantity into the price, quantity into the price, quantity into the price, yeah? See how simple it is. Let's do the calculation. See here, 400 into 98.333, yeah, m plus then what, 200 into 98, so 200 into 98 m plus 150 into 98 m plus memory recall 73,632. so this is the value of the closing stock. Now it's because of the rounding of there's a difference between the calculator and here 73,633. yeah, you know that, yeah, use your common sense. Yeah, so that's what you have to do, first in first out. Whatever that has come in first, you have to throw that out first, isn't it? Yeah, sold 500 quantity, it will come from the first lot. As long as the first lot doesn't finishes, you have to keep using the first lot. Then 300 sold, take out from the first lot. Yeah, so the remaining balance is 400. So then use this equation, simple equation. Yeah, 200 into 98, 150 into 98, and here 400 into 98.333. Simple. So that's how you will calculate the closing stock as per the FIFO method. And then you are going to take the value of the closing stock, right? By balance C by D, 75,000 is the face value, and the value of the closing stock is 73,633, yeah, which you just calculated, right, as per the FIFO. So this will go over there, yeah, in the investment column. So now what you have to do, after doing the interest receivable, the closing balance, the valuation of closing stock, what you have to do, now you have to tally this account, find out the balancing figure, and the balancing figure will always go to where? Profit and loss account, because if you have made profit on sale of investment, it will come on the debit side. Yeah, as you know the format, see the format, the profit on sale will come on the debit side and the loss on sale will come on the credit side. Yeah, profit on sale debit side, loss on sale credit side. And then the interest account, you know that the interest account, the balancing figure of interest account will always be where? It will always be on the debit side. Why? Because this is an income account, right? It's an income account and it always have credit balance, so credit side always be bigger and the balancing figure will come on the debit side of the interest account. Yeah, so to profit and loss balancing figure. So let's calculate that. It's very simple. See here, let's see the credit side first because that's always bigger. Interest column, 6,300 plus 1125 plus 4050 plus, see here, plus 225 plus 1687.5, that's equal to 13,387.5, right? Yeah, so credit side always bigger, so take it on the both the sides and then go on subtracting from the debit side. Minus 2,700 minus 750, yeah, then there's nothing, so that's equal to 9,937.5. so that will come on the debit side as to profit and loss. This is a nominal account, right? Income account. So the balance of that will go where? It will go to the profit and loss account, isn't it? We close all the nominal accounts, right, and transfer their balances to the profit and loss account. Yes. Then what? Then we have to tally the investment account, right? The investment column, the amount column. So let's do that. So see here, let's take the credit side. 50,000 plus 29,700 plus 73,633, that's equal to 1,53,333. so go on subtracting the debit side. The debit side we have the opening balance 1,18,000, subtract that, minus 19,600 the purchase we made, minus the one more purchase we made 14,700, that's equal to 1,333. so we have got a balancing figure on the debit side, right? So that's what profit on sale. Yeah, whenever we get balancing figure on the debit side, that's profit on sale, and whenever we get balancing figure in investment account on the credit side, that's what? That's loss on sale. Yeah, the format, see here, loss on sale on the credit side and profit on sale on the debit side. Yeah, so see here, profit on sale debit side, loss on sale credit side. And you know, right, interest column will always be bigger. Okay, keep that in mind. The credit side column will always be bigger, right? So yeah, this is it. This is what you have to do. Yeah, simple, right? FIFO method also we saw here. FIFO method was also not a big deal. It's a very simple method. Yeah. Now, as I said earlier, that if we have time, then we'll also see WAC method of closing stock valuation. Yeah, weighted average cost method. So let's do that. Let's understand how to value the closing stock as per WAC. So see, it's a very simple method. The same thing you have to do. Yeah, draw the boxes, opening balance, purchases in a proper date sequence. Yes, and draw the arrow marks wherever you have made sales. Yes, same like the FIFO. What have we done over in the FIFO? Yeah, but here what you have to do, whenever you sell, you have to calculate how much is remaining. Yeah, whenever you sell, see here, and you have to take in total. In FIFO, what we did was, in FIFO we just concentrated on the first lot, first in first out. Here you have to see the entire thing. Okay, so see here, you have sold 500 quantity over here. After this, after these two boxes, so you had how much? 1,200 plus 200. You had 1200 plus 200, you had 1400. Yes, you sold 500, so the remaining is what? 900. So the balance is 900, right? This is what you have to do. And then immediately you have to calculate WAC. What is WAC? Weighted average cost. Whatever you have previously, of that you have to calculate weighted average cost. How will you do that? Calculate the total cost divided by total quantity of both of these things. Yeah, so see the calculation here. WAC 1, 1200 into 98.333. yeah, see here, 1200 into 98.333, that's equal to 1 lakh. See here, 1 lakh 17,996. yeah, this thing plus then what, this 200 into 98, 200 into 98 into 98, that's equal to 19,600. yeah, 19,600. so if you add those two together, 1,17,996, then it becomes 1,37,596 divided by the total quantity 1400. yeah, these two total quantity divided by 1400, you get what? 98.28. this is the WAC 1. okay, weighted average cost of these two lots. Is that clear? Yeah, so you have calculated successfully the WAC 1. Now what you have to do, now you have to see the next sale. Next sale happened when? Next sale happened on, see here, on 1st November, right? So immediately above that, what you have to do, you have to calculate the balance. How will you calculate the balance? Simple. See here, you had previously 900 quantity. yeah, now don't look here, okay, look here only. You had 900 quantity, yes, then you purchase 150, isn't it? You purchase 150, that's equal to 1050. so now 1050, and then you sold how much? 300. so minus 300, the remaining is how much? 750. so the balance would be 750. Is that clear? So you got the balance correct? Yes. Then what you have to do, then you have to calculate the WAC 2. yeah, whenever you sell, you have to calculate WAC. You have to see the balance and you have to calculate WAC. okay, so now to calculate WAC 2, what you're going to do is, you are not going to take these two lots, okay, because you have already done the WAC of these. yeah, so you're directly going to see over here 900 into 98.28. okay, see the calculation here, 900 into 98.28. okay, ये लोगे directly 900 into 98.28 plus what, plus 150 into 98. ये और ये साथ में करोगे, 150 into 98. okay, what you have to do is summation of the previous whatever you have. okay, so you have this 900 and this 150, so summation of the cost divided by the summation of the quantity, right? So 900 into 98.28 and then 150 into 98, do that, divide by 1050, you get 98.24. all right, so this is your WAC 2. Now once you get the WAC 2, then you are done. yeah, you are done, nothing, that's it. WAC 2 you have got 98.24. so just multiply those two together, the last balance you have, the quantity of the closing stock and the WAC. That's it, you got the closing stock. See here, 750 into 98.24, 750 into 98.24, you have got the closing stock 73,680. yeah, so that's what you have to do. This is the WAC, that's all, simple. करना तो कुछ भी नहीं है ना. फर्स्ट व्हाट यू हैव टू डू, व्हेनेवर यू सेल, जब जब सेल करोगे आपको वैक कैलकुलेट करना पड़ेगा. जब जब सेल करोगे वैक कैलकुलेट करो. okay, and when you calculate the next WAC, yeah, like here WAC 2, what you have to do, you don't have to see the previous lots, no, okay, because इसका WAC already हो गया है, तो क्या देखोगे, you will see only this and the next purchase. okay, so see 900 plus 150 minus 300 is equal to 750, isn't it? That's what we did. 900 balance we had over here, we purchased 150 and then we sold 300, so the remaining was 750 over here. okay, so जब जब सेल करोगे आपको WAC कैलकुलेट करना पड़ेगा. okay, so this is the closing stock valuation as per weighted average cost method. Easy. So yeah, so this is it. yeah, compare it with FIFO and understand it properly. yeah, pause the video and understand. So that's all for this video. okay, then see you in the next video.